Good evening, everyone. It's UPB from OptionMillionaires.com. Thanks for joining me tonight. Just going to go over some charts for tomorrow. Tomorrow is options expiration. I'm going to hopefully have a live video tonight later on at OptionMillionaires.com starting at about 9:30 to 10 o'clock and beyond, depending how many people show up and how many questions we have, etc., etc. Once again, thanks for joining me right now. Let's get into today's action and what we could be looking at tomorrow, some support lines, resistance, and a couple stocks we could possibly be playing for bounces. Guess what? Futures are up right now. Yes, we're looking at about 2.5 hours after the market closed. Futures are higher, just like they were yesterday at about this time and the day before that. So we're just getting a little bounce after hours. CRM reported they're higher after hours. We have a couple other stocks that reported. Right now, we can look at today's action, which when I was up doing my option idea video last night, talking about SPG, Simon Property Group, X, US Steel, and COF, Capital One Financial, futures were up about 0.6% right here, 2:30, 3 o'clock in the morning. I went to sleep, and they just kept drifting lower all morning, and they plunged lower, and then about 20 minutes into the day, stocks tumbled. Actually, it was exactly a half hour into the day when the Philly Fed number came out. It was awful. Stocks tumbled, but then posted a miraculous jump back up and surpassed the 10 a.m. Price. From there, that was the rip to sell today. And you can see, I talk about this a lot, and I'll go to my SPY chart, but we had a high, a lower high, another lower high, and then we tumbled. The same thing, high, lower high, tumbled. We kind of made our way back around lunchtime, and then it was the same thing, right? Lower high, and we hit our low after hours. Stocks closed at the low of the day, but they just kept going lower. And after hours, we hit our low. S&P futures hit 129975, a big break there of the 1300 mark. And we'll see if that is a possible bottom there. It could be a bottom all the way down to zero. Keep saying that, right? Stocks just go to zero. No, that's impossible. So what we are looking for is the chance for a bounce again. Let's just go into a couple charts. I did cover last night US Steel, and I said exactly a drop down to 2220 would be a good spot to hop in for a bounce. Sure enough, at the open, US Steel opened higher, but it fell down, and it was down over 2%, and it hit a low of 2214. And right about here, the options for the $22 calls were priced at around 60 cents. I said yesterday you might get them for 45, 50 cents. I didn't know when that would happen. It's all about time. Had that drop happened at, say, noon or 1 o'clock in the afternoon, where we have less time to expiration, that might have been the price of those calls. So it wasn't really for me about the exact price of the call as much as the price that the stock hit. And so it dropped through 2220, and it made the low today, 2214. It came back, hit about 2216 later on, a couple hours later, but this was the dip to buy and the rip to sell. Get in at 58.60 cents, and they hit $1 up here. So that's a nice gain. And you can go home, call it a day. So that was US Steel. Now, had you not got in at the low and bought and you moved on, you say, all right, well, let's go to Simon Property Group, stock that I covered last night in my video as well. And I said the 150 puts. So at the open, SPG opened higher, briefly. And from there, you could have bought the 150 puts all day and made money on them. Those puts were at 80 cents yesterday. That's what they closed at. The bid was 75, the ask was 80. And I believe you could have gotten as low as 110 maybe today. They went to 370 today. Possibly more. I haven't checked since about 15 minutes before the close. So that would have been a nice gain. Say you bought 3 of them for $1.10, that's $3.30. And you sold them for almost $4. That's around $1,100. That's a nice gain, right? $700 and something just for pretty much buying the put. And that was the prior day. I mean, had you bought puts the day before and held them till today, and we could be looking back tomorrow and saying the same thing. Wow, this is Thursday and this is Friday, which is why we're getting to the point where everything's just going down. Everybody's hopping on the bandwagon. The bus is loaded. The bears are all piling in. So I'm a bear myself, but I've been scolded so many times in the last 3.5, 4 years from the manipulation from the central banks, rumors about quantitative easing, that I've been pretty much sitting on my hands for most of it, dabbling, just quick trades. Let's move on to another ticker that I was in today's Countrywide. I did it again. Capital One Financial. And I was talking about the $50 calls. The stock opened a little higher and then drifted down, and then at 10 o'clock when everything else tanked, COF hit its low, 49.72. Believe here the puts were about 44 cents. That was the dip to buy. This was the rip to sell. About an hour and a half later, I believe they were at about 85, 87 cents. A nice double. And once again, you go home. Or you could have bought the puts and done what everybody else has been doing for the last 8 trading days, which is sell the rip. I just bleeped myself out. STFR. Sell the fabulous rip. And it would have been all right. Actually, COF held up pretty well, and this setup here on the chart looks very eerily familiar to what the ES looked like, the S&P futures, before they really broke down in the afternoon today. And so those are the 3 stocks I talked about last night. Now let's get into today's action. The SPY dropped below my support line, 131.25. And I said if it bounced there, that was a spot I'd be looking to really get into some calls, either for next week or the June expiration, and it broke through that. So I'm not making any kind of meaningful move into the calls just yet. And I'm also still leery of the puts, but I continue to bring up this possible scenario here. The repeat of last summer, except from a higher level, which would mean we'll stop at about 121, 122, 123, somewhere around there, assuming we get this kind of cascading waterfall of a drop, which still makes this price here not so bad for puts if you think about what could possibly happen. But it's just something to think about, something to keep in mind. I think we're still, and I bring up the RSI, we're just unbelievably oversold right now. And every time we've been this oversold, we've had a nice bounce. I mean, this time we were oversold in late August of 2010. They announced QE2. So who knows? This is what the Fed wants. They want lower prices right now so they can reestablish their easing and try and stimulate growth, if that's at all possible. So yes, especially with options expiration tomorrow, everybody's piled in the puts. The bears are on a bus heading to a big pile of treasure. I think it's definitely possible stocks could open with a nice big gap and hold gains for the first time in a long time. That would be the best time to do it. Some of you guys might have been trading options back in September of 2008. You remember options expiration, monthly option expiration, I think it was September 18th. I'll have to look back. But if you guys can look back and yourselves and see that they picked that day to ban short sales on the financials. Do you remember that? And every stock rocketed higher. I that day had Caterpillar. I think there were $65 calls. I had to look back on the board, but I believe they were 20 cents, and I sold them for $7 and $10. And I remember trying to get the sales through. Everything was gummed up. Everybody and their brother. Every brokerage was just going bonkers. So the point being, if they're going to announce something or if there's some shenanigans going on, remember in November, remember when Geithner was named the treasurer, or it leaked out. I mean, can you imagine that? Here's TurboTax Timmy being announced as the new Secretary of Treasury, a rumor, and that was option expiration day, and the market was down. I believe the Dow Jones Industrial Average was at like 7,800, and it went up like 500 points from 2 o'clock into the close. So, point being, options expiration day can be wild, wacky. At 2 o'clock, if everything's flat, take a gamble for $50 on a bidless 2-cent option, and who knows what could happen. Obama might come out with some sort of speech that, who knows? Anything's possible. That's what's so great about stock options. Anyway, while I'm talking, the futures have fallen back down. So, like I was saying last night when I posted those 3 option trades to possibly look at, the futures were up 0.6%, and 5 hours later when I woke up, they were down 0.2%. So, futures after hours are meaningless for option traders other than just a, well, it really doesn't matter until the market opens. We can't trade our options until the market opens. So, okay, that's enough. I'm going on and on. Have yourselves a good night. I do have that live option expiration video tonight. I'll be live going over charts, etc. at optionmillionaires.com. So if you want to join me there, probably start about 9:30, maybe 10 o'clock, depending. And later tonight, I'll probably have another video of a couple charts to go over for options expiration tomorrow, because it's a fun day. You got a couple dollars to throw in there, you could really make some nice returns. Once again, UPB, optionmillionaires.com. It is May 17th. Thanks for joining me. I'll see you guys again soon. Goodbye.